and welcome to Looking at the Markets with David Modell, the ribbon trading strategy. I'm going to show that to you in a moment. First, if you would like some help with your trading or investing, or if you'd like some help putting together a plan for your trading or investing, because that's important, you can email me for coaching. The email address for the coaching is davidmodell@gmail.com. So let's look at tradingview.com. And there is the ribbon. It kind of looks like a ribbon, right? Anyway, it's 3 exponential moving averages that I put up there, all right? And also, please be aware that this strategy does not work 100% of the time. It does not work perfectly, so I recommend testing it out with demo or virtual trading where you don't use any real money. You want to make sure that it works before you start investing or trading with real money. And even then, only use small amounts of money and respect your stop losses, all right? Have an exit strategy so you don't lose too much money if it goes wrong. All right, so yeah, it kind of looks like a ribbon, I guess. And I've got Apple stock up here. But this can be tested out with virtual or demo trading on different time frames. I've got the 1-minute candles up here where each candlestick represents 1 minute of price action, but you can test it out on 2-minute candles, 3-minute, 5-minute candles, daily candlesticks, 1-day candles. If you're more of a swing trader, 4-hour candles. Again, just test it out, but not with real money. All right, make sure it works before you start using real money with it. Okay, so I've got a ribbon of 3 exponential moving averages, 3 EMAs. The 5, the 8, and the 13. All right, 5, 8, and 13. The 5 is the purple one here, light purple, and that is clinging closely to the candles, to the price action. Then the further away one, a little bit further away, is the 8 EMA, and that's in blue. And then the one that is farthest away from the candles is the black one here, the 13-period exponential moving average, all right? And so you get that ribbon there. And really, before you take a long position, you need 2 things to happen if you're going to try this particular strategy out, okay? So we'll go back here, let's say. You need 2 things to happen. You need for a candle to go above all 3 of the lines, all 3 moving averages, okay? If a candle is not above all 3 of them, that's basically bearish, okay? So if the candle is below all 3 of them, don't go long, don't buy, because you'll be fighting against the trend, and I don't want you to do that with this strategy, all right? The second thing that needs to happen, and both of these need to be true, okay, so the candle has to be above all 3 moving averages. It doesn't necessarily have to close above all 3. You can make that a rule if you want to be extra careful and wait until the candle closes above all 3 of them. So let's focus in here so we can see a little bit more clearly. And yes, right here, this candle, okay, it went above. Actually, so did this one, come to think of it. This candle was above all 3 as well. But there's a problem with this candle, okay? And I'm going to tell you the second rule, okay? So yeah, okay, so this candle is above all 3 of them. But the second rule is that you need the 3 lines to be in the right order. The ribbon has to be in the right order. It has to be the 5 above the 8 and the 8 above the 13, okay? It has to go in that order, from top to bottom, 5, 8, 13, all right? If you want to look at it the other way around, if you want to go bottom up, okay, 13, 8, and 5 in that order. Whichever one's easy for you. I like to start at the top. Okay, so for me it's the purple, then the blue, then the black. All right, 5 EMA, 8 EMA, 13 EMA. Now let's take a look at this candle. Hopefully you can see it. Yes, it's above all 3 of them. It even closed above all 3 of them. It closed here at the bottom of this red candle, barely above all 3, but above them. But are the 3 lines in the right order? Not really. They're kind of on top of each other, aren't they? That's not what I'm looking for. I want to see some space between all three so I can tell, so I can discern that they're in the right order. I can't tell if they're in the right order if all three of them are on top of each other. Okay, but then you get a candle here. It definitely is above and closed above all three of them. And I know the candlestick is covering the lines, but if you removed the candle, okay, and I can hover over the three lines here, as you can see, the 5 is above the 8, is above the 13. When I hover over them, I can see it. I can see it on top of the candle. You see right there on the top of the candle, 5, 8, 13, okay? You can see that they're in the right order from top to bottom. And so you might get in, okay? And then you ride it up, hopefully. When do you get out? Well, one way to get yourself out is if either of those conditions is not true anymore, then you can just get out of your position. You can sell your stock or whatever it is you're trading. So if the candle closes or goes, let's say, if the candle goes below all three of them, which it did here, you can get out, okay? If you want to be super safe, which I recommend, okay? Or if the three lines are not in the right order anymore. Notice that both of these things happened at the same time. The candle went below all three of them, and also they weren't in the right order anymore because you had two lines on top of each other. I don't know if they're in the right order here. That's not a good sign. And so if you want to be a super safe trader, if either one of these is not true anymore, you can get out, okay? But then as soon as it's true again, you can get back in. It was true again right here. The candles above all three, and they're in the right order once again. There's enough space between them so I can tell that they're in the right order. The ribbon, that is, the three lines, okay? And so you would have been out here, then right back in. That's okay. If you're using a low-cost or free type of broker, then, you know, commissions won't cost you much, and so you can get out and then get in again without getting eaten up by commission costs, hopefully, right? All right. So there you go, and ride it all the way up. And then when do you get out? Well, let's see. Well, over here, two of the lines are on top of each other. Okay, you may have to hover over the lines to really tell that that's true, but the 8 and the 5 are right on top of each other here, so I'm getting out of my long position, okay? And I'm glad that I did. And also, actually, look at that. At the same time, didn't the candle close below all three lines? It went below, and if you want to be super safe, wait until it closes below, and it did. At the same time that two of the lines were not clearly separated. Okay, so either way, I would have gotten out, and I would have avoided the downturn here. All right? So it's not perfect. You can lose money with any of these strategies that I mentioned. It's possible. So please be careful with it. But that's the ribbon. Okay? It's pretty simple. Only 2 rules to get in, and if either of those rules is broken, then you can get out and wait for the next opportunity. Be patient with it. All right? I hope this was helpful to you. I hope it gave you an idea of how to start using 3 exponential moving averages, or what you might call the ribbon trading strategy. If you want more coaching, if you want more help, I offer the coaching. You can email me at davidmodell@gmail.com for that coaching. I want to thank you for watching and for listening. I will talk to you again soon.